A quote from George Santayana: "Those who cannot remember the past are condemned to repeat it." Let's take a look. According to StockCharts.com, Richard Wyckoff, shown here, was an early 20th century pioneer in the technical approach to studying the stock market. He is considered one of the five titans of technical analysis, along with Dow, Gann, Elliott, and Merrill. At age 15, he took a job as a stock runner for a New York brokerage. Afterward, while still in his 20s, he became the head of his own firm. Wyckoff was an avid student of the markets, as well as an active tape reader and trader. He observed the market activities and campaigns of the legendary stock operators of his time, including J.P. Morgan and Jesse Livermore. From his observations and interviews with those big time traders, Wyckoff codified the best practices of Livermore and others into laws, principles, and techniques of trading methodology, money management, and mental discipline. From his position, Mr. Wyckoff observed numerous retail investors being repeatedly fleeced. Consequently, he dedicated himself to instructing the public about the real rules of the game as played by the large interests or smart money. In the 1930s, he founded a school which would later become the Stock Market Institute. The school's central offering was a course that integrated the concepts that Wyckoff had learned about how to identify large operators' accumulation and distribution of stock with how to take positions in harmony with these big players. His time tested insights are as valid today as when they were first articulated. So, why listen to Richard Wyckoff today? Well, because he developed this price cycle pattern. Let's move from the price cycle pattern to this pattern here. And let's get more specific with this chart. This chart is the Wyckoff market cycle pattern. In the chart, you can see the period of accumulation and consolidation, a massive markup run, then a bunch of back and forth called distribution, then note the final new high at the end, followed by a reversal markdown process that reverses it all. Does this structure look at all familiar to you? Let's take a look at our charts. Looking at our charts here, which is the S&P 500, I've taken the opportunity to draw the Wyckoff market cycle lines. The drawing's not perfect, but should look familiar to you, specifically the previous chart. Are there some differences? Yeah, but it's quite surprising how similar the moves are. Allowance always has to be made for some deviation, but the overall point is that the larger structure fits the S&P 500 structure quite well. Let's go to another Wyckoff chart, which shows a larger overall perspective. Looking at this overall distribution schematic from Wyckoff, we see where we might be now, and the structure suggests that the 2014 to 2016 timeframe was the accumulation phase. The run between 2016 into early 2018 was the markup phase, and the period since January 18 has been the distribution phase. As you can see from this chart, the process of new highs could be short-lived. The implication is from a matter of days or perhaps even months, but any price advance from here would likely be limited and would carry more risk. Let's go to one last chart. So this chart here is the one that I drew earlier with the Wyckoff lines, and then I've added to it the megaphone structure that I showed to you not long ago, within the last week or two. And it seems to fit well with the charts from Wyckoff. And this chart here indicates we could retrace back to the highs set in about 2015, and that is this horizontal line here. And that's at about the 2100 level for the S&P, but for here the spiders it's about 220 or so. Now, stepping back for a moment, nothing is set in stone, and this is only a coincidental possibility. However, we are not the only chart followers looking at these possibilities. As such, These trends can lead to a self-fulfilling prophecy. But remember too that the Fed has telegraphed accommodation for the markets, which may come and go, and a deal with China can come at any time. So, as usual, be prudent and be prepared. And that doesn't mean sell at any cost. It means be prudent and be prepared. And that is your edge in the market. For today, that's Chew Dog Charts. Thank you.